Have you ever seen this happen? You see MACD flashing a buy signal, you jump in, and the market drops like a rock. Then when the stochastic says overbought, you sell, and gold shoots 200 pips the other way. Welcome to the real world of lagging indicators. But luckily, there's one tool that breaks that rule, a forward-looking indicator that detects new trends before most traders even notice them. It's called the Schaff trend cycle, or STC for short. The Schaff trend cycle is one of the few indicators that combines trend, cycle, and time into a single formula. It doesn't just react to price, it reads the rhythm of the market. If MACD is like a driver who only looks in the rearview mirror, STC is the radar that scans what's coming next. Built from MACD's structure, STC adds a cyclical brain that identifies when the market is shifting from accumulation to breakout, or from expansion to correction. Markets always move in cycles. After every squeeze comes an expansion. The problem is, most traders arrive too late. MACD signals after the move has already started, while stochastic often gives noisy and conflicting readings. STC fixes this by combining a short-term EMA, a long-term EMA, and a 10-period cycle to detect those early rhythm shifts. When STC moves between 0 and 100, you're seeing the heartbeat of money flow. A rise above 25 signals the start of a bullish phase, while a drop below 75 warns that selling pressure is building a new down cycle may be starting. What makes STC special is speed. In testing, it often identifies new trends 3 to 5 candles earlier than MACD, especially on the M15 and H1 charts. For a trader, those few candles can be the difference between a clean entry and a losing trade. When STC rises from the 20-25 zone just as price breaks out of consolidation, it's often the start of a strong bullish leg. When it falls sharply from 75, smart money is exiting before the crowd catches on. Think of the market as a giant spring. When it compresses for too long, energy builds up, and when released, it explodes. STC is your pressure gauge. When the line curves up from the bottom, it shows that stored energy is about to be released. When it bends down from the top, momentum is fading. You don't need a dozen indicators, just learn to read STC's rhythm, and you can confidently take your buy or sell with precision. No indicator is perfect, and STC is no exception. Sometimes it can remain stuck in overbought or oversold zones for a while, especially during volatile periods. When that happens, don't try to call tops or bottoms, wait for confirmation when the STC line actually turns. The best approach is to pair STC with a trend filter like the EMA 200 or super trend. If STC flashes a buy while price is still below the EMA 200, it's likely just a pullback. But when both align in the same direction, your odds increase dramatically. You can also fine-tune the cycle length to fit your style. Scalpers might shorten it to 5 or 7 for faster signals, while swing traders can extend it to 20 or 40 for smoother, more reliable trends. The shorter the cycle, the quicker the reaction, but the noisier the signals. The longer the cycle, the slower but cleaner the read. Think of STC as a market clock. Each cycle is a heartbeat, and understanding that heartbeat keeps you one step ahead of everyone else. Schaff once said, "Markets don't move because of price, they move because of the cycle of greed and fear." STC is the needle that measures those emotions. When greed dominates, the line climbs like a mountain. When fear takes over, it drops into the valley. Great traders don't react to emotion, they follow rhythm. They don't care if the market moves fast or slow. They care about which phase it's in: accumulation, breakout, or distribution. Once you understand that, you stop hating sideways markets. Quiet periods are just the buildup of energy before the next move. When STC starts to turn, you'll see the breakout before the crowd even realizes what's coming. That's the true power of this indicator. It doesn't predict the future. It reveals the shift happening right now. This isn't magic. It's the logic of market cycles. The market always moves in rhythms of compression and expansion. If you found this video helpful, hit like, subscribe to Zeus Trading Cashback, and join our free Telegram group linked below for real-time trading signals and our exclusive 100% cashback program. Sometimes, the tools that most traders ignore are the ones that make the biggest profits. Trade smart, trade with the trend, and let the TTM squeeze be your radar for every storm before it begins.